Commerce Alive Today presents
Egghead Software. Victor D. Alhadeff founded Egghead in 1984. Alhadeff had been involved in an oil and gas limited partnership until a drop in prices drove him out of business in 1983. Shopping for software later that year, he found that salespeople at computer stores spoke in technical jargon that often confused the average customer. Alhadeff had sold shoes while in college, and with this retail experience, he decided that he could sell software far more effectively using traditional customer-friendly methods. Using $50,000 of his own money along with $1 million from local investors including Paul Allen, a co-founder of Microsoft Corporation, Alhadeff opened his first Egghead store in Bellevue, Washington. From the beginning, Egghead made an effort to make computer software less intimidating to the average consumer, projecting a warm image through the store mascot, a cartoon character named Professor Egghead. Salespeople received intensive training in order to become familiar with a wide range of software and explain it in simple terms. Egghead carried a wide range of software, as many as 1,300 titles, while its warehouse maintained a further 1,000. Customers were allowed to take software home for a 30-day trial period, and stores had up to 4 computers available for in-store demonstrations. Furthermore, Egghead featured extremely low prices, sometimes 40% off the list price. With its unique approach to software retailing, Egghead's sales rose quickly, and it soon was adding new stores. Corporate customers accounted for a major percentage of Egghead's sales, and the company established a large direct sales force in 1985. Soon it was selling to Fortune 500 companies like IBM and Boeing. Despite its growth, Egghead kept its costs down, investing its savings in new stores. The firm's quick growth attracted attention and investor interest. Some investors were cautious, however, due to a controversy surrounding the bankruptcy of Alhadeff's previous company, against which several investors filed suit claiming Alhadeff had misled them about the company's finances. In 1987, Egghead prepared to go public. The offering was called off at the last minute, however, when the U.S. stock market fell dramatically in October of that year. Alhadeff instead raised $25 million in credit from the U.S. Bank of Washington, and several million more from private investors, including Prudential Venture Capital, for a total of $47 million in venture capital invested in Egghead. Egghead's sales came to $77.5 million in 1987, nearly doubling sales of the previous year. Perhaps more importantly, the firm had profits of $2 million, after losing nearly $1 million in 1985 and 1986. However, in the rapidly changing computer industry, the firm faced new competitors. B. Dalton Books was expanding its Software Etc. division, which had over 100 boutiques, many of them in the bookstores, and Babbage's Incorporated, carrying similar merchandise, doubled its stores in 1987 to 58. By early 1988, Egghead operated 107 stores in 13 cities and maintained $40 million of software inventory. In June 1988, Egghead finally went public, with an initial offering of 3.6 million shares at prices above 50 times the firm's 1987 earnings. Egghead used nearly $24 million raised in the offering to add about 100 new stores and put the rest into working capital. In one 9-month period, 64 new Egghead stores were opened as the chain tried to saturate the market before it was filled by competitors. As a result of this growth, Egghead stores and corporate sales staff accounted for about 10% of U.S. software sales in 1988. Despite annual sales climbing toward $350 million, however, profits declined due to the swiftness of expansion. In addition to opening the new stores, Egghead added 60 salespeople to the direct sales staff of 132. That meant an addition of 1,600 total employees in 1 year, and new salespeople required extensive training. As a result, the firm's administrative and selling costs doubled in a year and its operating margins sunk from 4.5% in 1988 to about 3.7% in 1989. Egghead tried to obtain maximum profits from its low margins by getting volume discounts from software manufacturers. That meant increasing inventory, however, which was both expensive and risky in an increasingly unstable software market. This tumult led to 2 straight years of losses for Egghead, and the company was forced to close 29 stores to cut costs. With large volumes of software flowing quickly through its warehouses, control over Egghead's inventory system slipped and theft increased. In 1989, in the midst of this period, Alhadeff hired Stuart Sloan and Matthew Griffin to help turn around the company. Sloan, who became chief executive officer, had a background on Wall Street, where he had led the leveraged buyout of Quality Food Centers Incorporated in 1986. Griffin, who replaced Alhadeff as chairman, had made millions in real estate. The two put internal controls into effect that made each store manager responsible for the performance of his or her store. Retail store managers were sent monthly profit and loss statements for their stores, while district managers were sent statements for their areas. Furthermore, Sloan and Griffin refocused company efforts on selling software directly to corporate customers, who accounted for 60% of sales. The move strengthened Egghead's bottom line. During this time, however, a new rival was emerging, chains of computer superstores that matched or beat the prices of Egghead's software and also sold computer hardware. Egghead responded by strengthening its promotional machinery. When Microsoft's MS-DOS 5 operating system came out, Egghead promoted it extensively, and sold it for $39.99, which was 60% lower than the $99.95 list price. Seeking to take advantage of its higher level of customer service, Egghead invested $3 million into training its sales experts. It also added 300 items to the store's inventory, increasing the selection in the average store to 1,600 items. Egghead was profitable again by 1990, with sales of $519 million and profits of $15.4 million. However, a growing recession was affecting the sale of personal computers as well as PC software, and computer superstores were becoming more popular. Furthermore, hardware manufacturers were beginning to offer free software with hardware purchases, circumventing software retailers altogether. As software became more standardized and easier to use, Egghead's customer service became a less significant advantage, and other retail outlets, such as bookstores and office supply stores, began to stock software. Attempting to boost sales, Egghead began promoting and licensing business applications by Computer Associates, the country's second-largest software firm. It signed a $3.5 million contract with SailPoint Systems to shift its point-of-sale software to IBM's OS/2 operating system. The POS system linked the firm's stores, distribution centers, and headquarters. Most software products were bar-coded by version when the firm received them, helping its sales and distribution. By the end of 1991, the firm had 205 stores in 20 states and sales of $665 million. It remained profitable, with earnings of $15.7 million. As Egghead continued to expand rapidly, opening 12 stores and closing 2 during the first quarter of 1992, earnings again declined. Furthermore, the company made a costly error when it overstocked Microsoft's new Windows 3.1 software, predicting heavy demand that never appeared, in part because several computer manufacturers had already loaded the program onto their hardware as an added feature. Egghead fought back with an aggressive marketing campaign and planned to open between 20 and 40 stores by the summer of 1993. Software industry price wars intensified during 1992, driving margins still lower, and Egghead brought in a new management team in early 1993. Timothy E. Turnpaugh, previously vice chairman and operations manager at Seafirst Bank in Seattle, became president and chief executive. Griffin, who had resigned the year before, was replaced by Richard P. Cooley, a director and retired chairman at Seafirst. Egghead's problems could not be solved simply by changing management. As fierce competition continued to batter the company's bottom line, Egghead's earnings for the fiscal year of 1993 plummeted 56% from 1992. In the wake of these dismal reports, Egghead once again brought in new leadership. Turnpaugh was named chairman in July 1993, while Terence Strom, the former chief of electronics retailer Best Buy Company, was chosen as Egghead's new president. Strom quickly trimmed the company's workforce and led Egghead into the rapidly growing catalog sector with the purchase of the mail-order business, Max Place. He also cut software prices by 5% in an effort to make Egghead more competitive with electronics superstores. Although cheaper software prices drove Egghead's sales for fiscal 1994, the company's profits suffered as a result. Upon reporting a net loss of $500,000 for the year, Turnpaugh resigned. Strom and former Egghead vice chairman Ronald Erickson jointly assumed leadership of the company. Since Egghead's boutique software stores continued to lose sales to one-stop shopping superstores such as Fry's Electronics, Strom stewarded the company through a major shift in strategy. In July 1995, Egghead announced that it would open larger stores more akin to its giant competitors. While the typical Egghead outlet was only about 2,000 square feet, Strom planned to build 10,000 square foot stores that would now offer computers and peripherals to go along with the software that had been the company's traditional focus. That same year, Egghead formed Elecom, which concentrated on business-to-business electronic transactions. Though 1995 proved to be a successful year for Egghead due in part to brisk sales of Microsoft's newly launched Windows 95, Egghead's profits sunk once again in 1996. Egghead had shed its direct sales unit, depriving it of the revenue generated by software sales to corporate, government, and education clients. Moreover, the transition to larger format stores had proved costly, and the company reported a net loss of nearly $11 million. In January 1997, Strom announced his resignation, and George Orban, a longtime Egghead board member, took the reins of the troubled company. In an effort to improve Egghead's profitability, Orban closed nearly half of the company's 158 stores and pulled out of a number of markets altogether. According to the February 24, 1997, edition of PC Week, Orban believed that Egghead had expanded into too many geographic markets more than it could afford to advertise and distribute in. At the same time that Orban decreased Egghead's retail presence, he poured money into the company's internet business, which had begun to sell software directly to customers over the World Wide Web in November of 1996. This business is in its infancy, but it is showing promising growth and consumer acceptance, Orban told the Washington Post on February 1, 1997. In May 1997, Egghead further bolstered its online operations by acquiring Surplus Software, which sold computer hardware and software directly to consumers through catalogs and the internet. This purchase marked a diversification of Egghead's business plan. Previously, the company had simply aimed to supply the latest software at the high end of the retail market. However, with Surplus Software, Egghead entered the off-market sector of the industry. Consumers of off-market products were less interested in the newest generation of program and more so in obtaining outdated but still functional products at lower prices. Through Surplus Software, Egghead purchased distressed inventories, outdated products or overstock, from manufacturers and resold them to consumers over the internet. By November 1997, Egghead had 3 internet sites operational. In addition to selling discount computer products on its Surplus Direct website, www.surplusdirect.com, Egghead also launched a consumer auction website, www.surplusauction.com, whereby consumers made bids on refurbished or off-price technology products. The company's flagship website, www.egghead.com, offered a range of hardware, software, and accessories. At the same time, Egghead spun off its Elecom division into an independent company, albeit one in which it retained a 25% stake. While Egghead's bricks-and-mortar retail sales remained weak in 1997, its internet business thrived. Between the first and third quarters of the 1997 fiscal year, traffic at Egghead.com increased from 600,000 to over 6 million customers. Recognizing which direction offered it a better chance at future profitability, Egghead made the bold decision in January of 1998 to close its remaining 85 retail stores and become exclusively an internet business. To reinforce this new direction, the company changed its name to Egghead.com. We decided on the internet, which is growing much more rapidly than the retail channels, Orban told the Surprise Spokesman Review on January 29, 1998. By shuttering its retail operation, Egghead stood to reap substantial savings. In addition to reducing its workforce by 800 employees, the company also was freed from both leasing and construction costs. Moreover, distribution expenses would be only a fraction of what they were, since the individual internet customer, not the company, paid merchandise shipping costs. Even more promising for Egghead was the potential profits e-commerce offered. Industry insiders predicted that internet sales in computer hardware and software products would grow from $2 billion in 1998 to $11 billion in 2000. While market analysts applauded Egghead.com's brave move, the company's transition to an internet-only operation was fraught with challenges. We expect to invest heavily in marketing and technology and therefore expect to incur substantial operating losses in the foreseeable future, Orban announced to the Spokesman Review on May 6, 1998. To develop its internet presence, Egghead.com entered into several alliances with major internet portals. For instance, in February 1998, Egghead.com became the premier computer and software merchant on Yahoo! Internet Guide. Its efforts were successful. Egghead's 3 websites collectively ranked 6th among major internet commerce sites as measured by Media Matrix in May 1998. Although Egghead.com reported significant losses in fiscal 1998 and 1999, $50.2 million and $34.4 million, respectively, the company's outlook was positive. As the Portland Oregonian explained, in the developing e-commerce world, the bottom line replaced with new performance indicators, in which Egghead.com scored well. The company's inventory costs had plummeted as expected from $100 million to about $14 million. With over 40,000 products for sale, Egghead.com enjoyed 7 million customer visits per month. Demonstrating its continued desire to strengthen its position in the online market, Egghead.com merged with the leading cyber auctioneer in November 1999. This new partner, OnSale Incorporated, sold a variety of computer hardware and software products, as well as vacation packages, consumer electronics, and fitness equipment. OnSale's at-cost site was rolled into the Egghead.com site, while Surplus Auction and Surplus Direct were moved to OnSale's auction area. With the merger, Egghead.com had the size and strength to leverage better prices from its providers. Even more promising was the fact that Egghead.com could cease its price war with OnSale and could compete more effectively with the likes of Gateway Computer and Buy.com. Egghead.com moved its headquarters to OnSale's offices in Menlo Park, California. Orban was named chairman of the new company, while OnSale CEO Jerry Kaplan became president of Egghead.com. In December 2000, right before Christmas, the company's servers were compromised, and it feared that the credit card data of over 3.7 million people was stolen. The company first publicly denied that there was a problem, then notified Visa Incorporated, which notified banks, who notified consumers, causing the breach to escalate into a full-blown scandal. Many credit cards were canceled. The company later discovered that credit card information was not obtained. In August 2001, the company filed bankruptcy and worked out a deal to be acquired by Fry's Electronics. However, the deal fell apart after Fry's accused Egghead of failing to provide financial documents, and in December 2001, the company sold its domain name to Amazon.com, fading the company from the retail landscape forever.
Welcome to Egghead.com. Going sideways. Folks, this is the Cybervator. It guides you through the computer store inside your computer. 11th floor, where the biggest computer brands are always on sale. Virtually speaking. Going diagonal, auctions hard to find items, and the Love Lounge? Oops, someone's mouse is wandering. Egghead.com, the computer store inside your computer.
If you have any fond memories, please indicate it at the comments below. Thanks for watching, subscribe, and like.